Good evening, everyone. Okay, I'd like to give you a very small introduction about Miss Harini Sridharan. Miss Harini Sridharan is a qualified chartered accountant, a company secretary by profession with over 8 years of consulting as well as industry experience in automobile and service sectors. She is currently on her plans of setting up her own GST practice after a recent exit from a Big Four. Having a deep-rooted passion in the field of GST, she has delivered various seminars and lectures in ICAI, ICSI, indirect tax and narcotics, etc. She has also contributed to various articles in ICAI journal, ICMAI journal, GST newsletters, and so on. This was a very short introduction about her. And over to you, Tamil.
Thank you, Vidya. Ma'am, over to you. Now you can start your session.
Sure. Uh, Thank you very much. Thanks, Vidya and Tamil, for the wonderful introduction. So, my session is actually jammed between two wonderful sessions. One is memory techniques, and the other is GST amendments. So, I think the topic that we are discussing today, that is time of supply, would really interest you all because given the importance of the subject, I would just like to take you through how important the subject is, and that's the reason we have it in the midst of two important sessions today. So, see, whenever we are preparing an invoice, what becomes more important is determination of the rate, value, and the place of the supply. What we are generally missing out is whether the invoice is issued within the timelines or not. So what happens when the invoice is not issued within the appropriate timelines? There are good profits, but there is no enough cash flows. So if you're just wondering how this really works, we'll try and understand it through an example. So when you're doing a GST audit, you would have already performed some GST audits as an article assistant for financial year 17-18. So when you were trying to verify the correctness of the turnover, you would have found that for the full year, the turnover matches with the total of the month's turnover. So would you just give the go ahead for the turnover verification? The answer is no. You'll have to compare the turnover as per the books versus the turnover as per the time of supply provisions, whatever we are going to discuss today. Whether the turnover is reported in accordance with the time of supply provisions, you will have to verify it month-wise. So the reason for me stating this is there is going to be huge interest liability if you don't compare it month-wise. So here in the example that I have taken, the full year turnover is equal to 44,000. Turnover as per the books is 44,000, and the turnover as per the time of supply provisions is also 44,000 for the full year. But if you see month-wise, there is a difference. As per the time of supply provisions for the month of April, the turnover should have been 1,000 rupees. This is just a hypothetical example. So this is just taken for your understanding. And for May, the turnover was supposed to be 15,000, but whatever has been accounted in the books is only 13,000. For other months, it is matching, and for the end of the year, for March 2018, the turnover as per the books is 14,000, whereas what needs to be reported as per the time of supply provisions is 0. So what happens here is, end of the year, the total difference between the turnover as per the books and turnover as per the time of supply provisions is 0. Here, just because you have disclosed an increased turnover for a month, which is not actually applicable as per the time of supply provisions, you're not going to be rewarded by the government by giving some interest rewards. You're not going to be rewarded. Whereas, if you're not stating the turnover as per the time of supply provisions, there is going to be a interest liability that is going to be casted on you. So from the date on which the amount was supposed to be paid till the date on which the actual payment has been made for this period, there is going to be an interest that is charged at the rate of 18%. So if you see, the total interest for the month of April in the example that I'm showing you is 160 rupees, and for the month of May it is 1885 rupees. This is calculated based on the number of days, liability into the number of days into the interest percentage. So the amount of 2045 may look meager, but if you're actually computing it versus the total turnover, the turnover that I have considered in the example is just 44,000. It is 4.65% of the turnover. So what will happen? The interest is going to eat away your profit margin. Your profit margin is say only 10%, out of which 4.65% is going to go by way of interest. So you may be showing very good profits in your books, but at the end of the day, you will be suffering a real cash flow issue because of the interest liability. So this is just to quote why time of supply provisions needs to be followed. Why is it quite important to follow the time of supply provisions? So just before we get into the concepts of time of supply, I thought it is right for me to tell you why this provision is actually adopted. Now, if you ask me, is the time of supply provisions the same as the time of payment of tax? The answer is no. Both are two different events. Time of supply provisions is provided as per section 12 and section 13. Section 12 tells you what is the time of supply provisions for goods, and 13 tells you what is the time of supply provisions for services. Whereas the payment of tax and filing of returns is being provided for in section 39 of CGST Act 2017. 39 subsection 7 says every registered person who is required to furnish a return under subsection 1 or subsection 2 or subsection 3 or subsection 5 of section 39. So all these are registered persons, various class of registered persons who are supposed to file their returns. So it is being said, the amount shall be paid by the taxpayer to the government not later than the last date on which he is required to furnish such return. So as and when a return is being filed, the tax should be paid. That is what is being provided in section 39. So time of supply provisions that we are discussing today is not the same as time of payment of tax. Payment of tax is done along with filing of returns. So what are the provisions that we're going to discuss today is being provided for in section 12 and section 13. Section 12 talks about what are the time of supply for goods, and section 13 refers to what is the time of supply provisions related to services. So if you actually get back into the basics, GST is a levy on goods as well as services. The tax that is being levied for goods and services has been combined, has been merged and brought into a single legislation called GST. Earlier we had VAT, we had excise, we had service tax. There are no different legislations now. Effective July 2017, everything has been combined and one single act called GST has been introduced. So though the tax section 9 of CGST Act, the levy of tax, talks about both goods and services in common, we have time of supply provisions differently determined for goods and services. So that's the reason we have two separate sections, section 12 and section 13. So if you look into it, we have 6 subsections each. We go through each and every subsection in detail now. So what is being stated as time of supply under CGST Act? Is it a choice? Can we adopt and can we not also adopt? Is there a choice for a taxpayer to follow the time of supply provisions as being stated in section 12? If you ask me, the answer is no, because the legislation uses the word shall. The liability to pay tax on goods shall arise at the time of supply as determined in accordance with the provisions of this section. The same thing is being provided for in section 13 as well. The difference is only the Services. Services is there for section 13, and goods is the time of supply for goods is being provided in section 12. So it cannot be changed. The time of supply provisions cannot be changed for goods and services at the will of the taxpayer or at the will of a department officer. They cannot say you determine the time of supply based on these criterions, which is not provided for the act. It cannot be said. What can be determined is only according to the act. It is mandatory. So before discussing the time of supply provisions, we need to definitely understand certain other concepts, because time of supply is definitely not a independent concept. It is not a standalone concept. It needs to be thought over after understanding certain concepts. So I'm sure I have seen the earlier sessions of SICASA. So some basic sessions regarding the supply and input tax credit has already been taken. So I'm sure you're all aware of the basics. So I'm just proceeding with that kind of an understanding. So first, what concept needs to be understood is supply. So whether a transaction is a supply or not is quite important. If a transaction does not qualify to be a supply, then time of supply provisions need not be referred at all. So if you remember Schedule 3 of CGST Act 2017, it says what are all the transactions or activities that do not qualify as supply of goods or supply of services or both. So Schedule 3 talks about some disqualifications in that regard. And also, if you look into the levy section, section 9, it says alcoholic liquor for human consumption is not covered under GST at all. So that is again a non-GST supply. So for all these, and again, if you remember petroleum and petroleum products, if you refer to section 9, subsection 2, petroleum and petroleum products are being stated to be brought into GST from a date that is yet to be notified by that will be notified by the GST Council in the future. So when all these transactions are specifically excluded under GST, there is no requirement for you to determine the time of supply. Only when there is a supply, you will have to refer to the time of supply provisions. So first, you'll have to understand what is a supply for that. Second, whether a supply is goods, whether it is a supply of goods or it is a supply of services. It's important to understand that though section 9 talks about, as I was stating it earlier, though section 9 talks about the levy of tax for goods and services together, section 12 and section 13 has a differentiation for goods separately and for services separately for time of supply concepts. So you'll have to understand whether the supply that you're referring to, whether the supply that you're trying to find the time of supply for is a good or a service. It is also important for us to go through the transactions that are being specified under Schedule 2. Certain transactions are regarded as goods, even though they are in the nature of services. Certain transactions are regarded as services, so they are in the nature of goods. So Schedule 2 talks about such transactions which are being specifically regarded as goods and specifically regarded as services. So for instance, the concept that I immediately remember now is a works contract service. In a works contract service, though the majority of the portion is only transfer of goods and there is only minimum services, it is required that the whole supply is classified as a service because of the mention in Schedule 2. Works contract service, works contract is deemed to be a service under GST. So hope you would have all gone through the definition of works contract service. So here I will stop myself by saying it is important for us to understand whether a supply is a good or service before understanding the time of supply provisions. Third, so what is a works contract service has a restricted definition only to immobile property. So it is not applicable to movable property. So when there is a combination of goods and services, you'll have to determine when it is with regard to a movable property as to whether it is a composite supply or a mixed supply. So when two or more supplies are there, we'll have to see whether the supply is naturally bundled and supplied in conjunction with each other, and there is an existence of a principal supply. If the answer is yes, you'll have to treat it as a composite supply. If two or more supplies are being provided, and there you cannot understand, you cannot determine that there is a principal supply in that entire supply, and the whole supply is being offered for a single price, then the transaction is called as a mixed supply. So when there is a composite supply and mixed supply, you hope you would remember what would be the tax liability for a composite supply and a mixed supply. So the tax liability as applicable to the principal supply would be the tax liability applicable for the entire supply, and same is the case with time of supply provisions. What is the time of supply for the principal supply would be the time of supply for the entire supply in case of composite provisions. In case of a mixed supply, the rate as far as the tax liability is concerned, the rate applicable to the highest rate of tax in the entire supply would be applicable for the whole package. So the same is the case with time of supply provisions also. The time of supply of the product which has the highest rate of tax will be taken into account for considering the time of supply for the entire package, entire supply. So it's important to understand what is the definition of composite supply and mixed supply, and determine whether the transaction qualifies to be a composite supply or a mixed supply. Then you'll have to determine the principal supply and the principal supply in case of composite supply, and the rate applicable to the highest rate of tax in case of a mixed supply. Moving on, the next concept that needs to be understood is the liability to pay tax is generally on a taxable person according to section 9 subsection 1. So 9 subsection 1 talks about the liability that is being casted on the taxable person. There are certain exceptions that are being stated under 9 subsection 3 and 9 subsection 4, where the liability is being shifted, the tax liability is being shifted to the recipient. And 9 subsection 5 of CGST Act talks about the tax liability being shifted to the e-commerce operator. He is not the supplier, he is not the recipient, but he is a third party. So the tax liability is being shifted to a third party who facilitates that transaction. So here, when we are looking into the time of supply provisions, section 12 and section 13, you have different treatments that is applicable for forward charge and reverse charge. So you need to understand what are all the transactions that are covered under forward charge and what are all the transactions that are covered under reverse charge. So you'll have to classify your transaction accordingly and then determine what is your time of supply. The next concept that needs to be understood is whether the transaction that you're contemplating is a one-time supply or a continuous supply. So continuous supply. So if you're looking into the continuous supply terminology as such, as a layman, you would say every business has a continuous supply transaction. Every business has a continuous supply transaction. But it is important for us to understand what is a continuous supply according to the Act. I'll take you through the definition in the next 2 slides. I'll take you through the definition of continuous supply of goods and continuous supply of services. So you'll have to understand whether it is a one-time supply or a continuous supply according to the provisions that is being provided under GST. Next, what are all the, when is the tax invoice required to be issued? What is the last date before which the tax invoice should be issued? This is provided for in section 31 CGST Act 2017. So I'll take you through what are all the various circumstances, what are all the various scenarios and applicable last date for issue of invoice. So hope it is clear so far. So as I was stating, the continuous supply of goods and continuous supply of services has a specific definition under GST. What is a continuous supply of goods is being defined under section 2 subsection 32. So these are all the characteristics. A supply should be on a continuous or a recurrent basis. It should happen again and again. It is not a one-time transaction. It should happen on a recurrent basis and on a continuous basis. And there should be a contract. It is quite important, right? There should be a valid contract. What is a valid contract is provided for in the Indian Contract Act. There should be a contract. That contract can be written or can be oral. There is no dispute on that, but it should be a valid contract. Contract is not defined under GST, so you'll have to refer to the Contract Act. So it can be whether or not by means of wire, cable, pipeline, or in other conduit. So you'll have to understand the importance of mentioning by means of wire, cable, pipeline, or other conduit. Though the Act mentions whether or not, it is important to assign meaning to those four terms. Any of these four terms or anything that is in this nature, it can be by wire, cable, pipeline, or any other conduit, or anything in that nature. That is the reason for specifying whether or not. Then the invoice is sent by the supplier to the recipient on a regular or a periodic basis. So the invoice shouldn't be a one-time invoice, shouldn't be issued only once in a while. It should be issued on a regular or a periodical basis. So if you're saying every month, fifth of every month, I'll be sending you the invoice, then the supplier should definitely send the invoice by 5th of every month should follow. Only then it can be a continuous supply of goods. So if you're just reading the first four conditions, any supply can be a continuous supply. Anything that is happening in a going concern, anything that is happening in a business which has a going concern, will have all these four conditions satisfied, because condition number 3 is also saying whether or not by means of wire, cable, pipeline, or other conduit. So I am just sending it by means of a normal road transport. It doesn't matter. So all these four conditions are satisfied. What is very important is to classify as a continuous supply of goods, there should be an existence of some contingency. So when the goods are being removed from the premises of the supplier, and there should be some contingency. There should be some contingency that is existing when the goods are removed from the supplier's premises. And that contingency is resolved. It is resolved only when the goods reaches the recipient's premises. So there should be a contingency. This element of contingency is very important for it to be classified as a continuous supply of goods. This is not being provided for in the definition of section 2, subsection 32. Don't search for it there. It comes by way of various judicial pronouncements in the erstwhile laws. So what is the best example that you can remember for classifying a good as a continuous supply of good is supplying oil by ONGC to its customers, supplying natural gas. So there are various examples like this. So there can be leakages in between. So the oil that is being sent will not reach the customer's premises in full. There are possibility of all kinds of leakages and wastages. So there is an element of contingency there. Moving on to the continuous supply of services definition. This is being provided for in section 2, subsection 33. So what is being provided for here is the same conditions as being provided for in section 2, subsection 32. Just that there is one additional condition that is being provided. So here also the services should be on a continuous or a recurrent basis, but there is a condition, additional condition saying the supply should be for a period exceeding 3 months. It should be for a period exceeding 3 months. We have a choice of the supply being lesser than 3 months in case of goods, but in case of services, it is mandatory to have services for a period of exceeding 3 months. Only then it can be classified as a continuous supply of services, and this should also be under a valid contract with periodical payment obligations. And just like goods, there should be a contingency that is involved in case of supply of services. So the best example that I can remember for a continuous supply of services is the construction activity. Irrespective of how much ever concrete that you're putting in or the tiles that you're laying, it doesn't matter unless the architect certifies the completion, unless the architect certifies the completion of the supply is not treated as being complete. So the actual supply doesn't matter, and it is having a contingency of being certified by an architect. So this is a perfect case of continuous supply of services. And second example that I can think of is software as a service. So when software is being provided as a service based on the monthly usage, so assume we have a lot of software like say software as a service on DBMS, database management service, or HR tools uses this kind of software. So based on the requirement, the software is being used, and as and when the software is being used, a monthly billing is being done. So either the supplier or the recipient is not sure of the quantum of the supply. So the supply gets freezed only upon issuance of an invoice. Only after the completion of the supply, the quantum of the supply can be determined. So hope you are all clear with the concepts of continuous supply of goods and continuous supply of services. So as I was stating, the last other concept that we need to understand before getting into the time of supply provisions is the last date for issue of tax invoice. The last date for issue of tax invoice is provided for under section 31 in case of goods as well as services. So in case of goods, when there is a supply of taxable goods, it is the general category. The second category that is being discussed under section 31 is continuous supply of goods. What is the last date for issue of invoice in case of continuous supply of goods? And the third category is when the goods sent or taken on approval for sale or return basis. So let's discuss each of these in detail. When there is supply of taxable goods and the goods involves there is a movement that is involved, then removal of goods will be the last date before which the invoice will have to be issued. If the goods does not involve movement, then delivery or making available of the goods to the recipient will be treated as the last date for issue of invoice. So as we were looking into the provisions of continuous supply of goods, if the goods are being covered under the provisions of continuous supply of goods, then the actual date of issue of successive statement of account, the invoice shouldn't be issued later than the actual date of issuance of successive statement of account or receipt of successive payment. So if it is being it is a habit of the supplier to give you a successive statement every month that this is the supply that has been made, and if there is a habit that 50,000 is generally transferred monthly, then on the date on which a successive payment is given or the date on which a successive statement is issued, the actual date, please note, the actual date of the issue of successive statement of account or actual receipt of successive payment will be the last date on which before which the invoice should be issued. If the goods are sent or taken on approval for sale or return basis. So the goods are sent or taken on approval. So assume I am the supplier. I am sending the goods to a potential recipient. He is not a actual recipient in the supply. He is just a potential recipient. So I am just sending it to him. I'm sending the goods to the recipient to make him feel the kind of the good that I'm sending him. So to know whether he's going to buy the goods or he's not going to buy the goods, I'll know it only after his approval or his rejection. So what is the time of supply here is before or at the time of supply. I mean, once the approval is being issued, once he says okay, then it is being treated as the time of supply or 6 months from the date of the removal. Earlier of these two events will be treated as the last date for issuance of invoice. So now if you see, we have certain Incoterms. That is international commercial terms. We have this X works and delivery at the customer's premises and all these concepts. So these will not hold any relevance under section 31. What will hold relevance is only the removal of the goods, irrespective of whether your agreement with the customer is X works or it is delivery at premises. The time of the last date for issuance of invoice is only the removal of goods. So what is being stated for services? What is the last date for issuance of tax invoice under section 31 for services? Again, we have three categories. One is taxable services and the other is continuous supply of services, and the third category is cessation of supply of services. Again, in case of taxable services, we have two categories. One is insurance or banking company or financial institution or telecom operator. So if there is a supply by an insurance company or a bank or a financial institution or a telecom operator, then if the supply is being made to a distinct person, if what is a distinct person? A person who is having the same PAN number but holding a different registration. He is a distinct person, right? When the supply is being made to a distinct person, then before recording in the books, if the supplier is recording in the books that he has made the supply to the recipient, the telecom operator is recording the transaction in his books that the supply has been made, or that date, or the expiry of the quarter in which the supply was made. So for instance, if the supply is being made in January, by the end of the quarter, that is 31st of March, the amount should have been accounted for. So either of these two dates, it is not being said that earlier of or later of, either of these dates can be selected. So if the supply is being made to a distinct person, either of these dates can be selected if in case the supplier is an insurance company or a banking company or a financial institution or a telecom operator. In case the supply is being made to others who is not a distinct person, who does not have a same PAN number, then 45 days from the date of supply of service will be the last date before which the invoice should be issued under section 31. So this is in case of insurance, banking company, financial institution, and telecom operator. So what happens in case of other than these specified people, when the suppliers are not insurance company, not banking company, not financial company, not telecom operator, then the invoice should be issued before 30 days from the date of supply of services. It should be issued before 30 days of supply of services. If you ask me, the GST provisions provides a time limit of accounting before 30 days. Can I have the same concept to be adopted even for my regular bookkeeping? The answer is no. If you are following the accounting standards or Ind AS provisions, you will have to record the transactions based on accrual concepts. The exemption for maintaining the books according to the accrual concept cannot be provided for GST, because if you note the purpose of the GST Act, it says it is only a levy of tax on intrastate supplies. So there is no power that is assigned by the GST Act to grant exemption under the Ind AS or accounting standard requirements. So it is 30 days from the date of supply of services only for the purpose of payment of GST. In case of regular bookkeeping, you will have to continue to do it under accrual concept. So that is as far as general taxable services are concerned. What happens in case of continuous supply of services? We saw the definition that the supply of services should be for a period exceeding 3 months, and there should be a contingency that is involved, and the invoice should be on a periodical basis and all that. So if all those conditions are satisfied, it will qualify as a continuous supply of service. What will be the last date before which the invoice can be issued for a continuous supply of service? If the due date is ascertainable from the contract. If the due date of provision of supply is ascertainable from the contract, then the due date of the payment will be the last date before which the invoice is issued. So, I'm sorry, this is the due date for payment, not the due date for supply. If the due date for payment is ascertainable from the contract, the due date for the payment, the due date, not the actual date, the due date for the payment will be the time of supply. If the due date is not ascertainable from the contract, then the actual date of payment will be the time of supply in case of continuous supply of will be the last date for issue of invoice in case of continuous supply of services. Please note, we haven't still got into the time of supply provisions. All that we are contemplating so far are only the last date for issue of tax invoice. All this is being provided under section 31. What we are going to discuss as far as the time of supply provisions are concerned are provided under section 12 and section 13. So if the due one is where the due date is ascertainable from the contract or not, and the other kind of continuous supply services is when the payment is linked to the completion of the event. So when the payment is linked to the completion of the event, on or before the date of completion of the event is the last date for issue of invoice. So this is as far as the continuous supply of services are concerned, and this is being provided for under section 31 subsection 6. In case of cessation of supply of services, the time when the services supplied ceases before the completion is the last date before which the invoice needs to be issued. So these are all being provided under section 31. So now we get into the topic, that is time of supply. So the time of supply in case of goods that is being supplied through a FCM, forward charge mechanism, is being provided under section 12 subsection 2. Earliest of these three events will be the time of supply, the actual date of issue of invoice, that is 1. The second event is the last date for issue of invoice under section 31. So we just now discussed the last date for issue of invoice for goods separately and for services separately. So in case of goods, it is as per the category. This will be the last date for issue of invoice. So all those needs to be considered, either the invoice issue of invoice date or the last date for issue of invoice or date of receipt of payment. Earliest of these three events will be treated as the time of supply in case of FCM, that is forward charge mechanism in case of goods. Please note this is only for goods. This is not for services. We have separate provisions for goods and separate provisions for services. Now, we have three conditions here. We have three conditions here, out of which I'm going to exclude one condition. I'm going to make your life simple. I'm just going to tell you earliest of invoice date or the last date for issue of invoice is going to be the time of supply, and it is not the date of receipt of payment. Earlier, before implementation of GST, we had advances received in case of services only being taxed. Only in case of service tax, we had the payment of service tax on advances received on goods, received on services. We didn't have such a concept in case of VAT. So the same thing is being replicated here, though originally they wanted to bring a level playing field between the goods and the services. Now they want to give a concession to the goods, saying that you need not pay advances that is being received against goods. So initially, I'll tell you the travel through which this amendment has been brought in. When the GST was originally introduced, everyone were made liable for paying tax on advances received on goods. Then this has been exempted for those persons whose turnover does not exceed 1.5 crores. For those who is having an aggregate turnover of not exceeding 1.5 crores, then there is no requirement to pay advances on goods. Then they made the exemption, they extended the exemption to all those who are receiving advances on goods. So this is the travel so far. So there are only two conditions effectively, either the invoice date or the last date for issue of invoice. There will be definitely some practical problems when you're giving your exams. So please note earliest of invoice date or the last date for issue of invoice is the time of supply in case of forward charge mechanism. Again, you have a choice. As a supplier, I have a choice to offer the amount that is not exceeding 1,000 rupees. If I've received an amount not exceeding 1,000 rupees even before the supply as an advance, I have a choice either to offer it on the date of supply or on the date on which the advance has been received. Anyway, this point will not hold much validity because the advances received on goods is simply done away with. You need not pay taxes on advances received on goods, so it does not hold much relevance. So when the goods are being sent by the principal to the job worker, if the job worker is not returning back the goods to the principal within the specified timeline, that is 1 year in case of inputs and 3 years in case of capital goods, then at the expiry of the 1 year or the 3 years, he'll have to issue an invoice. He'll have to issue a tax invoice and pay interest on the date on which a supply has been originally made. So again, here the time of supply provisions is a little deviating, though the interest liability accrues, but the liability to raise a tax invoice and bring it to the liability of time of supply provisions has been a little deviated. So I thought it is right to mention under exceptions. So now let's understand. Let's see whether our understanding is proper. So A is a supplier in Chennai. He supplies to B in Ernakulam, and he has placed an order on 18th of March. The transportation has started from Chennai to Ernakulam on 20th of March, but the goods had reached only 2 days after, and it reached only on 22nd March. The invoice has been issued on 21st of March. So here 5 lakhs has been received on 19th and 10 lakhs part payment has been received on 19th of March and the balance has been received on 25th of March. Here, what is the time of supply? There are only two conditions that you'll have to compare: the actual date of the invoice or the last date of issue of invoice under section 31. So here, the last date for issue of invoice is only coming first. So how do you determine the last date for issue of invoice for a taxable good? It is the date of removal of the goods. So what is the date of the removal of the goods? The transportation initiated from Chennai is on 20th of March. So that will be the time of supply. So then we'll see an example for continuous supply of goods. So we had two conditions there, right? So one is issue of successive payments, and the other is successive statement of accounts. Either of it can be issued, then it will be a time of supply, right? So here, if you remember my discussions, right? And for the continuous supply of goods, what is the last date for issuance of invoice is the actual date of the receipt of payment. That will be the actual date of the receipt of the payment, or actual date of issuance of statement will be the last date for issuance of invoice. So what this needs to be compared with what? The actual date of the invoice. So first we have two conditions again here also. One is the last date for issuance of invoice, or the date of the actual date of the issuance of the invoice. These two needs to be compared. So here, in the first example, the due date for the payment as per the contract is every 7th of the following month. So every 7th of the following month. For instance, if supply is being made in the month of October, 7th of November, the payment needs to be honored. The payment needs to be honored. So that is the due date of the payment. But the payment has been honored even before the due date. That is, it has been honored even before 7th of November. It's been honored on 6th of November. So what will be the time? So here I've given 3 different months. So here, what will be the time of supply? So the last date for issuance of invoice is 7th of November, but that needs to be compared with the actual date of the issuance of invoice. What is the actual date of the issuance of the invoice? 4th of the November. So October, 4th of November will be the time of supply. And same is the case with November and December also. So you'll have to compare the earliest event and then determine what is the time of supply. So please note, again and again I'm repeating, the due date of payment is irrelevant. Only the actual date of payment is relevant in case of continuous supply of goods. I'll make it a, so hope you will remember. I hope you will remember, for continuous supply of services, we had given importance to due date. In case of goods, it is only the actual date of the receipt of payment. So same is the case with actual date of issuance of statement in case of issue of successive statement of accounts. So actual date of issuance of statement will be the last date for issuance of invoice under section 31. That will need to be compared with the date of the issuance of invoice. So hope you're clear so far. We have completed the time of supply in case of goods where there is a forward charge mechanism. Now we will see what is the time of supply in case of forward charge mechanism in case of services. So in case of services, we'll have to see whether the invoice is issued within the prescribed time limit or not. That is the first step. You will not compare the actual date of the invoice with the last date for issuance of invoice like in case of goods. Here you will have to first ask whether the invoice is issued on time. That is the first question you'll have to ask. If the answer is yes, the earliest of the date of the invoice or date of receipt of payment will be the time of supply. If the answer is no, if the invoice is not issued within the time limit under section 41, the date of the provision of the service or the date of receipt of payment, whichever is earlier, will be the time of supply. So if the time of supply is not capable of being determined under either of it, then the date as being recorded in the recipient's books, what is being recorded by the recipient of services as receipt of services, will be the time of supply. So here we are not comparing the last date for issuance of invoice and the date of invoice. We are just asking one question, and if the answer is yes, a different treatment, and the answer is no, there is a different treatment. So now let's again enhance our understanding through an example. So here, advance received rupees 10,000 against provision of consultancy services, and consultancy services is provided worth rupees 50,000. So the balance amount is being received on 16th of May. Sorry, I missed the dates. 8th of April is the date on which the advance has been received, and the services are being provided on 10th of April, and the balance amount, that is 40,000, is received on 16th of May. What is the time of supply if the actual invoice is issued on 15th of April? So why are they actually giving you this? Because the first question that you'll have to ask is whether the invoice is issued within the time limit or not. So tell me whether the invoice is issued within the time limit or not. So before that, hope you all recall the discussions that we had on the last date for issuance of invoice in case of services. You remember the 30 days, 45 days, and in case of continuous supply of services, the due date of the payment. If the due date is not available, the actual date. And in case of cessation of service, in case of the continuous supply of services, if the payment is linked to the completion of the contract, the date of the as per the percentage of completion, and in case of cessation of services, you remember that chart? That chart needs to be applied after, and that needs to be remembered when you are answering the question whether the invoice is issued within the time limit or not. If the invoice is issued within the time limit, then it is the date of the invoice or date of receipt of payment. If the invoice is not issued within the time limit, the date of provision of service or the date of payment. So again here, so to remember whether the invoice is issued within the time limit or not, the last date for raising the invoices in the normal scenario is 30 days. Only in case of banks and financial institution, it is 45 days. So 30 days needs to be considered here. So 10th of May is the last date for issuance of invoice, but the actual invoice has been issued on 15th of April. So invoice is issued within the time limit. So now you're going to compare the invoice date and the date of the receipt of payment. So here, the advance received is taxable in case of services. The date of receipt of payment is not a condition that is excluded in case of services. Only in case of goods, there is an exemption that is being provided. Hope you all remember the discussions that we had so far. And here is a scenario 2 is a case where the invoice is not issued within the time limit because the invoice is supposed to have been issued on 10th of May, but the invoice is actually issued on 15th of May. So the date of provision of service, the date of payment, whichever is earlier, is going to be the time of supply. So now, in case of continuous supply of services, what is the last date for issuance of invoice? It is the due date. It is not the actual date. It is the due date. So if due date is ascertainable, then the last date for issuance of invoice, is going to be the due date of payment. If the due date is not ascertainable, the actual date of the receipt of the payment is going to be the last date for issuance of invoice. So for here, in each and every scenario, I have just compared whether it has been issued within the time limit, then what date of receipt of payment or date of issuance of invoice is the earliest of these two is the time of supply. If it is not issued within the due date, then the date of provision of service or the date of receipt of payment is going to be the time of supply. So now moving on to the next concept, that is 12 subsection 3. What is the liability to pay tax in cases RCM? So far in section 12 subsection 2 and 13 subsection 2, we saw what is the provisions that is applicable in case of forward charge mechanism in case of goods and services. So now here we are going to see what is the time of supply in case of reverse charge mechanism in case of goods, and 12.3 and 13.3 will talk about RCM in case of services. So here, time of supply is the earliest of the date of receipt of payment or the date of payment as entered in the books or the date of debit in the bank account or date immediately following 30 days from the issuance of invoice. So if you see, in case of RCM, in case of reverse charge mechanism, all these scenarios will be determined based on the recipient's handle, the date of receipt of goods and the date of payment as entered in the books and the date of debit in the bank account. All these will be determined from the recipient's handle. So only one scenario will be determined from the supplier's handle, that is the date immediately following 30 days from the issuance of invoice. So the supplier is issuing some invoice, then 30 days from the date on which the invoice is issued or any other document that is being issued by the supplier will be taken as a criteria. So here, let's look at one illustration. So the order placed date is 1st of April and the goods has been received on 10th of April. The actual date on which the invoice is issued is 15th of April and the payment, the recording in the books by the recipient is 20th of April. The rate of debit in the recipient's book is 25th of April. So there are only 3 events that needs to be compared. One is receipt of goods and the other is date of payment and the third one is 30 days following the date of issuance of invoice by the supplier. It can be an invoice or any other document, doesn't matter. So earliest of these 3 events is going to be compared and 10th of April will stand as the time of supply because that is the earliest of these three. Moving on, RCM in case of services. In case of services, the time of supply has been determined separately in case of transactions between associated enterprises where the supplier is located outside India. In all other scenarios where the supplier is not located outside India and still the supplier and the recipients are associated enterprises as per the Income Tax Act definition, in all other cases, when it is not an associated enterprises or when even though it is an associated enterprises and the supplier is in India, then it will be coming under the other category. So when the associated enterprise, when the transaction is between associated enterprises and the supplier is located outside India, earliest of the date of entry in the books of accounts of the recipient or the date of payment will be the time of supply. In all other cases, it will be 60 days from the date following the issuance of invoice or any other document by the supplier, or the date of payment will be the time of supply. So now we just move on to the example here. So as you're all aware, services provided by an individual advocate or a firm of advocates, when some legal services are being provided by an advocate or a firm of advocate, it will fall under the reverse charge mechanism, right? It will fall under section 9 subsection 3 because it is notified supplies. So here X provides legal services to Y. The date of provision of service is on 10th of April. The date of issuance of invoice is on 12th of April. Though it is a RCM transaction, some invoice or some document is being issued by X to Y. Payment is being made through check and the date on which it is being recorded is 10th of July. And the date of debit in the bank account is 15th of July. Earliest of these three events, that is, date of entry in the books or the date of debit or in the recipient's bank account, or 60 days following the date on which the invoice is issued, is earliest of these three events is 12th of June, and that is the time of supply. So we have covered the RCM transactions for goods and for services now. Now we'll move on to subsection 4, which talks about liability to pay tax in case of vouchers. So now we are done with FCM and we are done with RCM. Now we are looking into one another category called as vouchers. What is a voucher is being defined in section 2 subsection 118 of CGST Act. So it should be an instrument. Voucher is an instrument where there is an obligation to accept it as a consideration, a part consideration. So there is an obligation to accept it. So what will happen here? The person who is issuing the voucher cannot be obligated. The person who is receiving the voucher, who is redeeming the voucher, can only be obligated. So there should be three parties in case of a voucher. So one is the issuer, and the other is a person who is redeeming the voucher, and the person who is the customer who is redeeming the voucher, and the person against and the shop or the supplier against which the redemption is being made. So there should be three persons: the recipient, the issuer, and the redeemer. Three persons should be there. The issuer cannot be the redeemer. So there should be an obligation to accept it as a consideration or a part consideration. So the best example that I can tell you here is if you're purchasing some amount, some huge value from Bata, you will get a card to shop from say RMKV. So when you're shopping from RMKV, the person who the Bata would have already given the amount to RMKV so that the customers of Bata can be honored their voucher. So the person who is issuing the voucher here is Bata, and the person who is redeeming the voucher for some goods or services is RMKV. It cannot be services, it can only be goods in case of RMKV. In case of Shoppers Stop, there is a possibility of availing some other services also. So there should be it should be accepted for a consideration or a part consideration for supply of goods or services. So what is important here is it is important that the voucher should carry the terms and conditions of using such instrument. It cannot be redeemed anywhere, everywhere and anywhere. It can be redeemed only against certain locations. It can be redeemed only against certain suppliers. So who are the potential suppliers and what is the use before when it can be used? All these should be mentioned as part of the instrument. Only then it can qualify as a proper voucher. Now, if against a voucher, it is clear that you're going to redeem only saris and the tax rate that is applicable is only 5% because it's going to be only cotton sarees. If there is a clear instruction in that regard, then the goods that is going to be redeemed against voucher is identifiable. Then at the time of issuance of voucher, when Bata is issuing a voucher to you itself, the tax needs to be paid. If it is not identifiable, if you're going to Shoppers Stop, you can shop for beauty products, or you can shop for clothes, or you can shop for utensils. Then if you don't know what is the product that you're going to shop for, then the supply is not identifiable. When it is not identifiable, the date of redemption of voucher will be the time of supply. So the same is the case with section 13. In case of goods, when the goods are being redeemed against a voucher, it is section 12. When the vouchers are redeemed against services, then it is section 13. The date of issuance of voucher is the time of supply in case the supply is identifiable at the time of issuance of voucher. When it is not identifiable at the time of issuance of voucher, it is a date of redemption of voucher. So when you're not able to determine the time of supply in any of the above categories, any of the 4 subcategories that we have now discussed, then the date on which the periodical return has to be filed, the due date of return for which the for which the periodical return has to be filed will be the time of supply. If that is not there, then the date of payment of tax will be the time of supply. So how can you say I don't have an invoice, I don't have the details of payment? How can you say that if you ask me, if there is a sale, if there is a clandestine sale, if there is a removal of the goods without proper accounting in the books, or if there is no proper bank statements that is available supporting the supply, then in that case, if an officer comes and inspects the premises and he happens to find such a supply, then it is a clandestine removal of goods. So the date on which the inspection has been made, you would be liable to pay, right? So that the date on which the periodical return is filed, the due date of such return or the date of payment of tax will be the time of supply. So now we are covering the final last subsection of section 12 and section 13, which talks about additional consideration. So when there is a delay in the payment of consideration, when there is a delay in the payment of consideration, so I have supplied goods worth rupees 50,000 to you, and you have agreed that you will honor it by 15th of the following month, but you haven't honored it to me by 15th of the following month. So I'm levying you an interest liability of 12% for the period of delay. So when will I come to know of the delay? Only when you're delaying it. So I will not know it at the time of the supply. So the delay in the payment of the consideration cannot be taxed in the same lines as the supply is being taxed. So there is a different time of supply that is being issued, that is being notified for such transactions where there is a delayed payment of consideration. It can be in the nature of interest, it can be in the nature of late fee, or it can be in the nature of penalty. The date on which the additional value is received will be the time of supply, and that is being provided for in section 12 subsection 6 and 13 subsection 6. And the last section that is there in time of supply provisions is change the rate of tax. So assume I have made a supply today when the rate of tax is 18%. And tomorrow, when you are actually issuing the invoice, or receiving the payment, the rate has changed. What would be the time of supply in such a case is being provided for in section 14. Section 14 talks about change in the rate of tax. So there are only 2 categories. So there are 6 scenarios. I'm classifying it into 2 categories. One is with the supply being made before the rate change, and the other category is supply being made after the rate change. So if the supply is being made before the rate change, but the invoice is issued and the payment is received after the rate change, earliest of the date of the invoice or date of receipt of payment will be the time of supply. And if the supply is being made before the rate change and the invoice is issued before the rate change, but the payment is received after the rate change, time of supply is the date of invoice. So as simple as it, when the supply is being made before the rate change, the earliest of these two events will be the time of supply. When the supply is being made after the rate change, the latest of these 2 events will be the time of supply. So that is not applicable in all scenarios. Generally, if you follow this principle, you will be able to arrive at most of the time of supply provisions. But in case when when both the transactions are before the rate change, the earliest of date of invoice or date of receipt of payment when the date of supply is after the rate change will be the time of supply provisions. So that brings us to the end of the discussion of time of supply provisions. Thanks a lot for the patient listening. Over to you, Tamil.
Thank you so Thank you so much. Uh,
Thanks, Tamil. Thank you.
sorry, ma'am. Sorry for the interruption, ma'am. Thank you so much, ma'am, for your. Thank you so much from the very bottom of my heart to CA Harini Sridharan, ma'am, for valuable session on time of supply. I am very sure that the essence of the session reached to all the students who are preparing for the upcoming exam. Thank you, students. I am pleased